So we've seen two straight weekly gains at this point.
Yeah, and only a slight pullback in Asia trading. And what it looks like, analysts say, is that the bull run has legs. And what we're also seeing behind this is the fact Saudi Arabia, which the U.S., the Biden administration does not have a great relationship with, appears to be teaming up with Russia. Another problem for the U.S. in pushing these voluntary cuts that they initially made back in July all the way through the end of the year. And that really has given the big impetus to the oil prices that we've seen. Now, if you drop into the Bloomberg, you'll see that bets at $100 oil already soaring, even though some banks, such as JP Chase, remain a bit cautious. JPM is saying that crude unlikely to see $100 a barrel this year amid restrained demand. That said, analysts and traders are saying the tightness in the market is quite real. The IEA, the International Energy Agency, says global oil use hit a record 103 million barrels a day in June. The following month, Saudi Arabia cut production to a two-year low of about 9 million barrels a day. Now, check out the price charts. Since July 1st, Brent has risen about 20%. We've seen NYMEX crude traded in New York rising by almost the same amount. In fact, we've seen diesel fuel jump by a third because Russia also announcing that it's cutting back on some of its diesel exports. So there was some hope that the change in seasons would ease the pressure on the market, but the end of the year supply deficit projected by the IEA is now seen as just as severe as in the summer. One commodity analyst put it this way. She said our supply demand model shows some hefty deficits because a cut by the Saudis has a lot more weight than purported cuts elsewhere. When the Saudis say they will do it, they really mean it. And it is really looking like this is playing out exactly as the Saudis, the key player in the OPEC Plus cartel, had hoped. They really wanted to defend price, push prices higher, and it looks like that's what we've got.
And extreme heat is fast becoming a threat to global fuel supplies.
Yeah, it certainly is threatening fuel security, as they say, the availability for energy assets, because the extreme heat has been around the world. And for those of us experiencing it, it's one thing. But the impact it's having on the energy system is another. We know there's been a spike in electricity as most of us fire up the AC or the air conditioners. There's been a spate of disruptions in refineries. Macquarie Group says it has led to refiners cutting oil processing by at least 2% globally over those 2 months, June and July, that were the hottest months on record, not just here in the U.S., but around the world. In Bangkok, you saw them giving out ice blocks. Elsewhere in the world, there were air conditioners placed on the street, water given out, tourists in various big cities around the world just suffering under the sweltering heat. So the extreme weather is indeed a big deal. Many analysts, such as Traffic Euro Group, are saying, especially in terms of the problems for refineries in Europe and America with outages and problems that are not easy to fix. Just to give you one statistic, European crude processing fell by 700,000 barrels a day over the summer. That's compared to a year ago. And that's around 6% of regional throughput. And more than half that drop, analysts say, is due to the heat.